Welcome to TheoTrade. This is Don Kaufman. It's January 30th, 2019, and you are watching the TheoTrade evening video. We are just moments after the cash close on a day that's seen, well, tremendous number of earning reports both last night and this morning that are driving order flow. Obviously, we had the Fed today, which we'll discuss momentarily. But right here, right now, like this second, you have Tesla, Microsoft, and Facebook all effectively reporting. And we will take a look and a very detailed look at some of those as we kind of move forward in here. While we kind of get started here on this evening's video, first and foremost, let's cruise over to Apple. This was much anticipated inside of Apple. For those of you that tuned into the video, of course, on Monday evening, we in fact took a bullish position inside of Apple prior to this earnings announcement. We've effectively exited that bullish in-out spread near full profitability on that particular spread. So we're out of the contest, fully profitable in the Apple in-out spread. Okay, moving forward from there. And again, I can see the Nasdaq futures kind of rocking here a little bit. So obviously somebody is releasing earnings. We're going to have a quick glance. Okay, again, recording this literally 3 minutes after the cash close. It's not necessarily Facebook. Let's cruise over to none other than Microsoft. Microsoft appears to have some degree of information that's already out. Stock is rocking just a bit to the downside right now, but definitely having an impact, of course, on those Nasdaq futures. Last, but definitely not least, of course, we'll glance over at Tesla, which appears to not yet have reported. So again, I'll kind of keep you abridged of that situation. If you take a quick glance right here, yeah, we're putting some positions on in Tesla, and did have some positions on in Tesla coming into, of course, this earnings period. So with that, let's actually backtrack to the trading session occurring today. Everything about the Fed, let's get into it. First and foremost, I am going to back us out just a bit over here. This happens to be a 30-day, again, a 30-day 1-hour chart. And the reason I have tendency to use this is because it emphasizes, of course, a number of the gravity points that we've looked at extensively for literally the last year in trading. And to, again, emphasize these gravity points wouldn't necessarily do it justice. They're everything right now, especially in the midst of volatility. I mean, we discussed this again on the weekend video. We discussed it, of course, on Monday. Our expectations, okay, was that the Fed was going to come out rather dovish, and we were going to tag directly into, well, what we did, which is 26, okay, 82. And again, that's pretty much where we're effectively at right now, is the 2682 inside of the S&P 500 futures. Now, moving forward, and this was one of the important points that I wanted to make, on Monday's video and on, of course, the weekend video, is that, again, we fully anticipated that the first reaction to a dovish Fed was going to be a very, very positive reaction. Okay, the Fed came out, and I have to tell you, some of Jerome Powell's wording, absolutely brilliant, because it left us with a completely ambiguous idea of what the Fed is doing. Basically, what they said, as far as monetary policy, we've made absolutely no decisions. It was unanimous, however, that they not raise interest rates. That's no surprise whatsoever, but the ambiguous nature of it is what they intend to do with the runoff of the balance sheet, okay? And the market loved it, at least initially. Again, our kind of take on all of this is that we fully anticipated the market to come up, and we even talked about the 2682, okay? However, in the days that follow, of course, this Thursday, Friday, we very well may see some sell-side activity, given the fact that such a dovish Fed could be an indication, of course, of a weaker economy or uncertainty to the U.S. economy. Nevertheless, it would not surprise us, again, would not surprise us to see a degree of sell-side activity in the S&Ps as this week happens to progress. Now, okay, enough said on that particular front. What you also have to kind of be mindful of is where are we? And again, a really important point to make, especially coming into Thursday or Friday, where are we on the week in terms of what was expected? And when I mean what is expected, this is expected move, okay, for the remainder of the week. The upside of that expected move, we still have, okay, more than a ways to go. This would actually be a relatively large move if we're going to continue, okay, to any degree to the upside. Of course, to the downside, we're just, okay, south of about 2620. All I'm doing with this is giving you, again, kind of orientation on a middle of the week kind of look in terms of the capacity for the S&Ps to move higher and or lower. This, okay, has absolutely no bias whatsoever. So let's kind of counter something I just mentioned a moment ago. A moment ago I said my interpretation, my opinion would be that we'll actually probably reverse, in the latter portion of the week, of course, Thursday, Friday. And we'll especially, see some of that sell side if those bonds just kind of continue to creep up a little bit higher, may actually knock the financials down a little bit, taking the S&Ps a bit lower. Again, play wait and see. Now, this is the non-opinion kind of, this is no bias whatsoever. And that has everything to do with the fact that the expected move, we're kind of middle of the road right now in, again, the middle of the week. And something I want to reiterate when I'm talking about the expected move, you think to yourself, you're like, well, why would we mention this kind of midweek? Because nearly every week that we've seen recently, we have tagged the upside or the downside of the expected move. We have done neither. We came close to the downside, of course, on Monday of this week, but we've really, truly done neither this week. Again, we stopped cold inside of the S&Ps, okay, at that 2682. Could there still be legs to the upside? Well, of course. But again, we believe that the bias will be slightly to the downside for, again, of course, Thursday and Friday of this week. Now, switching it back over to earnings. One of the things that I would like to discuss for just a moment, again, Facebook taken off to the upside, absolutely taken off to the upside. But one of the things I want to discuss when it comes to earnings announcements, and I think this is probably one of the most important things that we could discuss during earnings announcements, it's everything to do with what we term expected move. Now, not everybody tuning in and not everybody that kind of watches here at TheoTrade has the thinkorswim platform, but this expected move calculation, it says approximately $10. What is that, what does that really amount to? Well, take a look at where Facebook closed. Facebook right now is about $10 higher, but take a look at where Facebook closed. Okay, look at like somewhere near the at the money straddle. The at the money straddle is trading for just over $10. The expected move is right around $10. Okay, all that I want to elaborate upon on this front, okay, is that forget about whatever the earnings per share are of Facebook or, of what they happen to be maybe inside of Microsoft or, okay, what's going on per se inside of Tesla, which obviously has come out and the stock is all over the place right now. Okay. The one thing that should resonate with you, and probably the most important thing you can discern from the earnings, okay, again, isn't about any of the fundamentals. It isn't about the earnings per share. It isn't about stock buybacks. It's about, okay, the ability for the stocks, okay, to literally trade right to the edge of an expected move, not just inside of what was expected, okay, but after the earnings are coming out, okay, they're actually moving to the edge of what was expected. And you're like, it's uncanny how it's going on again and again and again. Apple earlier today, to a T, moved $8. Obviously, later in the day, it rallied up a little bit further, but the stock moved up, okay, $8, sat there, all right, literally on the edge of the expected move. And we can go on and on and on and on for every liquid product that has effectively done this. And that opens the door to just a mass variety of strategies, okay, that you can employ surrounding what we term the edge of the expected move. Everything from butterflies to trading the day after the earnings. Okay, I could go on for hours just about the strategies that you could deploy in and around what we term, again, the edge of this expected moves. And that's probably the biggest takeaway from most of the earnings announcements that we've currently seen and seen out recently. So speaking of earnings announcements, here's Microsoft now. And this happens to be, again, just about 12 minutes after its earnings. The stock is down $2. Now, granted, there's still a $4 expected move. So you think to yourself immediately, like, it's not right. It's not right. Well, there's still a conference call yet to come and some trade tomorrow. We'll see if the stock is capable of moving what? The $4.50. It still could actually track higher and or lower at this point. Then, okay, we cruise down, of course, to none other than Facebook. Facebook, okay, literally on the edge of the expected move. Couldn't be any closer to the edge of the expected move at this point in time. Last, but definitely not least, Tesla. Where are we at in Tesla? Well, mildly higher at this particular time. However, Tesla, okay, still pretty much a free-for-all early on as the stock is actually traded both considerably lower and considerably higher. I will let you know I happen to have an in-out spread bearish position on this, so it ain't over. It ain't even close to over. Obviously not moving the full $30. But then again, you have Elon Musk coming out in a conference call here in the next few minutes, and anything, okay, of course, is possible. So I'll kind of reiterate some of the stance for the remainder of the week because there's still a tremendous amount of news to come out this week. Okay, put the earnings aside for just a moment. Put even the FOMC, put the Fed aside for a second. We still have much to come out, okay, on the China trade war front. We still have employment situation. We still have more information coming out on Brexit. Again, I am looking for a bit of a fade to the downside as this week progresses. Again, plenty of movement possibilities inside of the SPX, of course, according to the expected move. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.